Do let us know if the audio visual looks good here today. Good morning, Barbara. Barbara's in the house. All right, Romster, Mr. Savage. All right, how about everybody over in the pit? The pit. Large Void is here. Good morning. Audio visual is good. All right, terrific. Excellent. Hump day. What day is it, Mike? Mike. It's hump day. All right, let's get the video cranking. Get the day underway. Beautiful day here in the Northeast. 70 degrees, sunny. Day like today, you feel like playing hooky. All right, let me get the stream running and we'll get cranking here. Morning, trader. All right, good morning once again, everyone. Thanks for being with us. Today is Wednesday, August 26th, coming down to the last final days of the summer months. Before we get cranking, the regulators require that we display the disclaimers, risk disclaimers. Y'all associated with trading all understand the risks associated with trading. Of course, past performance not necessarily indicative future of results. All right, before we get to that chart. All right, so today is a cycle day 2 within our 3-day cycle structure. And typically on a cycle day 2, we're looking for some sort of balancing action. And in fact, the market has been pretty much doing that the entire week. So overnight, the markets would push either up to an area or down to an area. Then pretty much throughout the remainder of the RTH session turns into more of a balancing session. And again, we should not be surprised at this activity this time of the cycle, right? The summer months, the end of August. Of course, there's a lots of folks on vacation, right? All the things that are that are been ongoing for years upon years at this time of the year. So this is the time of the year where you take advantage of the good weather, take advantage of, frankly, the slower time, take some well-needed time off. I myself will be taking partial of next week off, so my segment next Wednesday will probably be out. So do it F5 to refresh. So if anybody doesn't have volume, first thing you want to do is do an F5, and that will refresh your side. If it turns out that there's still issues, then I will refresh my side. Okay, so check that out. So today is a cycle day 2, as I mentioned. As you can see, over the past few sessions, we've just been in a balancing area. All right, the upside references to 7710s, essentially 15s. Okay, hold on a second. Let me try mine. Then stay with me. Okay, how about now, Stuart? Check, see if Stuart has audio. All right. Well, everybody else does, so okay. All right, we'll have to keep going here. Stuart will have to figure that one out with Marlin. All right, so again, the upside, 77 tends to the 15. Of course, here to the downside, 76.60. All right, 77.15. So that's been the range. All right, and you can see the multi-composite profile here, MCP, multi-composite profile. So what would the bulls need to do? All right, so there's your balance point, right? 90s. What would the bulls need to do? The bulls would need to, right, CNC, clear and convert, right? Basically the upper value area here. And then again on the flip side, all right, initially CNC below the lower value. Those are the two initial areas. And then of course below that, right? And then above these highs here. So the outline is pretty well defined. Okay. Right now, we're essentially in the middle of that. This is the high, what I refer to as a high density area of volume. Simply all that that means is there's the greatest amount of volume with a value area, density area, whatever you want to call. So in terms of, price in that particular zone, there's not a great edge one way or the other. Okay. Maybe find an edge if it comes down to the lower value area and rotates back up, or the upper value area and rotates back down. And there is some room there to operate, about 20 handles. So again, we can operate within the context of the value zone. And again, this is a multi-composite, so multi-days. But we would, uh, most of us will look for some sort of more directional move, and that probably are not going to occur until one of these upper or lower areas. And I don't really anticipate that happening, certainly not today, although the market is the final say. It doesn't listen to me, doesn't listen to you. So we have to defer to what the market is offering us at all times. But for the most part, we're just kind of laying out a roadmap as to the potentialities for the market to do its thing. All right, so that's kind of the outline here of today. And again, when I say cycle day two normal, what I'm meaning is more of a rotational, balancing, consolidation type day. And given the most recent structure, I don't see a dramatic change in that to occur, at least not at this stage. All right, so that's the expectation. Of course, we lay out an expectation and then make whatever adjustments we need to as the market is indeed unfolding, if it's not as anticipated. So if it is as anticipated, we have a roadmap. If it's not as anticipated, guess what? We have a roadmap. Okay, so it's just letting the market outline its intentions. Okay, so one of the other tools that we do look at quite a bit, at least from my end, is the options market. And again, I'm not an expert at this, so bear with me. But this is the Gamma guys, or spotgamma.com. So if you are interested, go visit them. They do offer trials. But essentially, what this is showing you is just showing you positive and negative gamma. And again, negative gamma is denoted by the reds, and the dark purplish areas is positive gamma. So what does that mean? It means is essentially, gamma can be in either direction, right? Think about gamma as an increase in volatility directionally, where or instability, where positive gamma is more of a cushion against the directional move, and it provides greater amounts of stability. Okay, so what does that mean here in terms of this? So basically, the gamma line in the sand, all right, is 7680-ish, all right, somewhere in this area. So when we see this area where it separates the red over here to the right and the purple, all right, that basically is a gamma or a GEX, GEX, gamma exposure, right, line in the sand. Now that's different than my line in the sand today, but that's basically what that means. So negative gamma here, right, positive gamma here, all right, and that's basically where this is a 15-minute chart. So that's basically where price is right now. So when you take a look at your own charts, right? Yeah, this is SPX. Okay, this is SPX. So the adjustment there on SPX is 15. So in other words, 7,600 it'd be 7,615. So it's a 15-point premium for the ES. Okay. So right now, price is sitting around the 7680 ES. Okay. And we're pretty much right in the middle of that line in the sand based upon options, right? And so these are the gamma strikes, right? So again, these are dealer representation. Okay, so the purple over here to the right, those strikes offer, in other words, if price starts trading down, okay, dealers get shorter, which means they can buy and support. So act as somewhat of like a shock absorber. Okay. On the flip side, if the market starts ripping higher, right, the dealers get shorter, okay, and they need to then cover to cover their exposures. So there's negative gamma to the upside, positive gamma to the downside. So what does that basically mean for us today? Is it simply we're looking at this area where we currently are sitting between 70 and 90. We should not be surprised now to see that the current activity is pretty much book bookend between those areas. Does that make sense to everybody? So unless this changes significantly as the day unfolds, just bear in mind that if the market starts making a directional move in either direction, there's going to be some obviously options influence. But given today that the NVIDIA earnings are due out after the close, okay, and there's a fair sizable positioning against what the earnings will be, I don't think there's going to be a lot of directional move here today. At least that's my spidey sense, given what we're currently seeing. So we'll keep that, obviously in mind. Keep an eye out on any changes in the dynamics, and we'll continue on. All right. Any questions, comments about that? If not, we'll just switch over to our main charts here on our screens. And again, for those that are unfamiliar, we got a 750 tick chart to the right. This is our execution chart. Okay, as well as we have these. This is an ATR strategy over here to the left and right. And again, here's our 5-minute and for opening range. All right, so those are the core charts that we take a look at once we've gotten the bigger picture unfolded, and we'll go to work here in a moment. It was nice to see the GEX plot. Thank you for sharing. Sure. Again, today was pretty good in terms of what it looks like. Sometimes it's not as clean as it appears, but the gamma exposure chart, I pay attention to that quite a bit. And again, what I'm looking for is, if the options market is pushing one direction, what's the influence of that activity, right? How are the dealers more likely to respond? What's their positioning? And it is in real time, so it's not just, at the start of the day. That unfolds in real time. So it is, if you don't follow if you're a futures trader in any capacity, whichever, if you're not following the options market, it doesn't mean you have to trade the options market. If you're not following the options market and understand what's going on there, you're really missing a real key component of the market. All right. So, is it the tail wagging the dog type of thing? You just need to understand some core concepts about gamma exposure, or GEX. All right. Uh, the Gamma guys over there, I call them the Gamma guys for short, but spotgamma.com. They have excellent education. Okay. So there should be no excuse for anyone that is interested in learning about a subject, whatever that subject may be. In this case, we're talking options. Doesn't mean you need to be an expert at it by any stretch. That takes quite a bit of time to master, but you should understand the core concepts. And there's plenty of free education and even deeper education if you want to go down the rabbit hole for any of these topics. All right. But guys, give me just a few minutes. I'll be right back. Just gonna help my wife with her computer, and I'll be right back online. Okay, that was a false alarm. She didn't need me. I thought she needed me on to help on the computer. I'm like computer technician. I'm like everything here. All right. So again, just kind of a quick review. Just starting off the day neutral, and we'll wait for our 5-minute opening range. You can see here on the left, this is yesterday's opening range. So this blue zone, right? This is yesterday's opening range zone, 5-minute opening range, high, low, mid. And again, you can see here pre-opening here, we tag that up there around the 95s, and they get a rejection, right? So we'll see right now. There's our VWAP, and as you can see, just pretty much balanced here overnight. So nothing to get too excited about. This may be a relatively quiet day. But let's see if we can get something, at least one or two juicy trades out of this. And when the market's kind of in the middle here, it tends to drift higher, it tends to drift lower, without any real energy. But it certainly can trade if there's no real large orders, commitment one side or the other. Then the market tends to drift higher. The aggressive people say, okay, we're going to try to push it, and then tends to stall, and then it kind of rotates the other way, and it's kind of back and forth. And that's pretty much what we've been getting all week. So this is these type of rhythms really need to be, just be patient, right?
when they say patience is a virtue, very meaningful. So you can see what I'm talking about, right? Price kind of drifts up, stalls out, right back. And again, looking at the volume profile, okay, can help us quite a bit. We know where the upper value area is. And then when prices auction up into that area, in order for this to break out higher, we want to see an explosive level of volume begin to unfold. And that tells us that the buyers are really hungry. But if it just kind of auctions up there and it just kind of fizzles, exactly what happened typically is going to be the response. So again, volume is energy, right? Energy is important for any sustainable breakout attempt move. I have a diagram I'll pass along to everybody here. Some of you already have this. All right, the value breakout template. Okay, everybody should get a copy of that. And so what that shows what a typical, and again, it's a template. All right, so it's a guide for how prices tend to break out of a balance area. All right. So as you can see on that diagram, uh, you'll see kind of that notch of volume that would need to occur, right, to the upside. Making another attempt there right now. Let's see if that unfolds in a similar way. So if we're going to get a breakout, we're going to want to see, kind of an increase in volume up here above the upper edge of the value. And if we don't get that, right, it tends to fizzle back. We don't have to anticipate. I mean, we can anticipate the potential, but we don't have to kind of front run it before it happens. We want to actually see some sort of increase in volume. We want to see the buyers, really wanting to say, okay, I want to break this sucker out. And in order to do so, we need to commit some capital, right? We need to go through those areas. And then when we begin to start seeing that evidence of that, then we can start leaning in that direction that a breakout may be more sustainable. If you don't get that activity, then even though it's auctioned up there, it doesn't mean there's sustainability. right? But we are looking for that as a potential move here. All right, we do have a 5-minute opening range, high-low range in place. And now it's just, we have the outline, and now it's just a matter of we're waiting for something to unfold. And again, the idea for us here would be seeing a move above. And again, I'm not concerned about missing an initial move up. In many cases, that's probably going to be the best miss, if any, right? Because if it pushes up and then it fails and reverses hard, okay, we're merely looking for the move up. Again, give us kind of some increase in volume, and then getting a somewhat of a shallow pullback on lower volume relative, looking for that to hold, and then the move back up. So that's kind of the core outline and what we look for in terms of kind of price structure. So right now it is leaning in that direction. So we're on the alert for putting something on here, but we're being patient with it. I don't know if I can. I'll get what I can out of the way, if that helps. Let me see if that helps. All right, there we go. We got a trigger on that. All right, we got triggered to the upside. There's our initial move. Boom. Now, let's see if this can hold on a dip. All right, so we want to see some larger amounts of volume start printing. All right, a pullback to around 90, 91, 92s could be playable here. All right, so we got our initial move up. All right, now let's see if we can get some sort of a pullback here. All right, let's see if we can get a pullback here for a long. All right. See the volume? See the volume coming in? Take a look at that diagram. Does it match to the diagram? The template? Yes or no? Anybody? Bueller? Bueller? Does it match the diagram? That is a volume. Yeah. It's a where it says a poor high, HVN. Okay. Let's move that for everybody to see. Okay, right over here where it says poor high, HVN, high volume node. Okay, take a look at the chart here to the right. Right, high volume node. That makes sense now to everybody? High volume node, upper value area, high volume node. Okay, so that's kind of what we're looking for, right, in terms of price structure, right? Now the key is here that the market can give us a pullback and then a follow through. So all what we have going right for the market right now is that the market is um, adhering to a breakout type structure. Does not tell us that it's going to yet be sustained. So we get a pullback here. Again, this is where we need to see if the market can now re-energize, like in Star Trek, energize. Or is it just going to be a flop? Can be a flop, but at least the pattern is intact. All right, we did get a pullback here. Now the market needs to kind of hold and re-energize, or right, or a flop. So if we're going to get a breakout now after this pullback, it should start re-energizing, moving back higher. We shall see. You got order flow there up onto the left. All right, we got one scale. Back up into the high volume node area. All right, our stops at break even now. See if they can push higher. Come on, Seabiscuit. All right, two scales. Right. And now our break even level, this blue line, okay, that is our theoretical average. Everybody see that? Up in the top right, right? That's a theoretical average, meaning that is your break even line on the balance of the position. So cannot lose on that. We'll bring our stop up to target 1. All right, so we got a trailer now locking in the first TP. And if we can get above that high, we'll push it up and lock in the second TP. Per the chart with 3 setups, value breakout template on the profile, I will need some time to digest its meaning. Absolutely, it does take time. All right. All right. So what I'll do here, everyone, I'll just bring my stop up to second TP, and now we just got a runner. We got a runner. Everybody follow along with that? Laid it out. That's about as textbook a value breakout as you can get. The structure was there, the template was there, the expectation then on a pullback followed by an additional follow through. Right? Large void said, I followed. Thank you. Yeah, you nailed the poor high pullback. Well, again, it's whether I nailed it or not. I don't kind of look at it that way. I don't take, that's the template, right? Yeah, we do call out everything and, outline everything in real time. We always have. Sometimes it works. And, we're excited, of course, when it works. When it doesn't, well, it doesn't, you know. Just the market is the final say. But again, the market obviously gives us clues, right? And again, what you want to do here, everyone, if I can offer a suggestion, is take that image. Okay, so let's put this back up here. Take that image of the breakout from a range, balanced D-shaped profile. Take that image, and then over here, this is real time. Okay, so the image here, which is a template, and then the real time result. This is how you're going to make the connection. It's not necessarily about me calling out a trade. It's about you understanding the structure of it of a pattern and then looking for the clues that will offer us an opportunity to take advantage of that pattern in a modified or lower risk environment. Okay. Yes, idea generation, right? Patterns, and then we apply, a templated pattern would look like in an ideal condition, and then look for those type of patterns and as they unfold in real time. And that's how you begin to make connections. So this is a good example of this particular value or balanced breakout. So now at this point, it's just a matter of if the market has some more VIG, right, it will move higher. We have our trailing stop in case it fails. And we're happy in either case. We're satisfied. Why are we satisfied? Because we had an idea, we followed through on it, we executed the plan. I'd rather execute a plan, have it not follow through, get stopped out, accept the stop out that the plan didn't unfold, rather than do all that work in advance, set up the plan, the market gives us that opportunity, we do not take the trade, and then the plan works out. What hurts more? right? What hurts more? You got it, right? Doing all the work, planning it out, and then not taking the trade. Jeff Bezos talks about his regret minimization framework. Yeah, that's a great way. I never never knew that about him saying that. But yes, you want to minimize, right, your level of regret. Now it's just up to Mr. Market to do its thing. Why? What was the? So here's the question: Why would I? Why did I take these take profits? Anybody would have any idea? Why did I scale out at these particular levels? Anybody offer any response to that? Well, okay, I'll tell you why. Look at the initial volume bulge right here. Okay, which we were looking for. Yeah, Rom says some high volume nodes. Okay, terrific. Rom's been paying attention, right? So if you take a look over here on the profile, okay, we have some a bulge and some volume. So a high volume node, right? HVN. So a high volume node. So if we're buying them down here into the pivot area, right, we get a move back up. Well, what I don't know, of course, we don't know much of anything at this stage, but I can observe that there was a high volume area there. I don't know whether or not that volume is going to, price pushes up there and it rejects hard, right? A hard rejection. Certainly that could be a scenario, right? So the idea there would be, we entered, into the pivot area. Okay. And again, I entered on the way down into that area. I had a limit order there, but you could have waited and entered on the right hand side. Either one. You mean right? But the core of it is there's a high volume node there. So I want to exit into where there was some previous high volume because I don't know whether those sellers at that point are going to reject price, as it did over here to the left. So that becomes um, a logical place to scale something, right, to help mitigate the risk, right? Once the market has absorbed that, which it did, the buyers in, right, now we have a runner. So now the runner is a clean runner, right? The market can just, take off and do what it wants to do, and we'll just kind of trail it along the way. All right, but that's the rationale as to why these two take profits here. Just scale them out. You had an idea, played the idea, and now execute the idea. I place stops beside structure where a sell delta failed, live action says, and there are sitting bids to depth ahead of my stop. There's still risk liquidity hunting stops, but this helps. Good. All right. Again, as long as you have some sort of a well-defined plan and you've seen kind of repeatable patterns, they could be a number of different, reasons as to why you would be um, you know, taking profit or moving stops to where they need to be based upon your research. Okay. Why is my open P&L a factor? Oh, you know why the other day, I never turned it back actually. The other day we were talking with one of our members here. We had set up the trade symbol, we wanted to trade micros, John. Okay, so I don't know if you were here that day. So yeah, you recall. Okay, so we had set this up to micros. All right, so I never changed it back. All right, so yes, these are micros, by the way, just for full transparency. Um, but that was the reason the other day we had set the symbol to micros. I just never changed it back. But it's the same trade, whether it's micros or whether it's minis. Okay, cool. Yeah, it would have been nice if it was minis, but it doesn't really matter. I mean, you are computing under minis to generate signals. Yes. So the way this works, okay, on Sierra is you're pulling in ES mini data, okay, but you're trading the micro. This way, this is set up, configured, okay, because as you all know, if you were to set up a micro chart on its own, the data is horrible. Okay, it doesn't match what the minis trying to change the size of the chart. I've done that in the past. And then Sierra chart in their infinite wisdom. And I don't know if they did this originally. Maybe they did, and I never knew about it. But in their infinite wisdom, they created the crossover where you could take mini data and then trade micros. Okay, so that's the way we have that configured. But in terms of the, thinking about the whole setup here and how this is unfolding, again, whether it's minis or micros, it doesn't matter. The structure is the same. Yeah, so Large Void says there are extremely subtle variations in technical prints that have cost me trades on the MES micros versus the ES minis levels were pinpoint. It almost never happens the other way. Yeah, exactly. How come it doesn't happen the other way? Yeah. So this is a way of, and again, if you're using Sierra chart, you can do the same thing for anybody that's using NinjaTrader. It's a little bit different, a little bit more involved in how to set it up, but you can set it up, very similar, where you're trading micros, but you're using ES mini data. So it is a right way to do that with NinjaTrader. It's a little bit more, couple extra steps, but you can do that. All right, stopped out on the trailer here at the second take profit. All right, so we had two take profits here and stopped out on that third one here at level two, pretty much right in here. Not really getting any, really any action hard above the 7,700 So we're good with that. It's all about the plan. It's all about the execution. I mean, you put in a few of these a day, and really you don't need a whole lot more. You can always look back and say, well, I guess I should have managed it differently. Again, at this point, what can we do? What would be our option if we wanted to do, right? If the market started to move higher again, get back in. right? If you want to reestablish a long, just get back in and then manage it like it's a brand new trade. All right. So did we do the proper thing for the time being? I guess so. All right. Again, look at the volume here. All right. We got it. Look at this cluster of high volume kind of stalled out, right? They tried to, at that cluster of volume, they tried to push it back up. And look at the volume in here. So this bubble here, right? Again, there's some, high volume in here, right? All in here. And so after that price closed here, all right, it opened here, They tried to push it up, and look at the volume here. Just died on the next 5-minute candle. So there was no follow through, right, of volume. So that kind of put a kibosh, as my grandmother would say, put a kibosh on that move up. Live Action says, funny thing is ES and MES total volume was close to my big trade tool, showed more activity on MES. MES, I guess, it's both institutional. Like, what's happened is the institutional players are making markets, right, in the micros as well. So, they just have natural order flow there as well. Okay, but yeah, I guess there's more of a tendency for retail to be playing the micros than the institutional players. So it's more market making stuff. Yeah, I would say there's a greater preponderance of retail playing micros than the ES. Sure, that would be a fair comment. All right, now what? Now we just back to our observation mode. John says he snagged the Barbara Lopez trade. Barbara's in the room today, by the way. We get the Barbara Lopez trade underway. Oh, whoa. Hey, Barbara, check the symbol on that particular chart. Looks like you have an 8-tick reversal chart. All right, folks, there's your trade of the day. That might be the only good trade of the day. And we did it live, never Memorex. Okay. Okay, guys, we're done for the day. Live Action says, Dave, you are consistent in your trade calls. So here's the rub. Here's the thing. Okay, the consistency factor comes from looking for the same patterns. Okay, that we've researched for many moons. Okay, and so we're not just looking to guess that, oh, I think the market's going to go up or I think the market's going to go down. Because when you're into the guessing game, it's not going to work. Yeah, it may work occasionally, but ultimately it's not going to work a long term, that is. So you have to have structured patterns that have been researched. And then when those patterns unfold, again, as this example is today, now it could be another trade, another example, another pattern at some other point. This today was this one. That's why we have a playbook. Okay, so how many of you have a playbook? I know many in the PTG community are in the process of building a playbook. I have a playbook here, PTG playbook. Okay, And if you are a PTG member, you can have access to the various playbooks that we have, right? So this is what I've developed, and I have a number of different categories. And of course, I'm sure you have all seen coaches on the sidelines, and they have their laminated card, and their laminated card is up to their mouth. Why? Because they don't want the video cameras to read their lips. So they have their laminated cards, and on their cards are all various plays. There's a play for midfield, there's a play for the red zone, there's a play for third down, second down, et cetera, right? So they have all these different plays that they have researched, and they actually know the statistics on them. So this is what it comes down to. So when it's nice to be able to say, "Oh, look, you made a great call." It's not my call. I'm very humble when it comes to that. It's not a call. It's reading the structure and having seen that structure in the past gives me confidence to say that's the structure I'm going to play now. Even as with a coach, an execution of a high probability play at any moment in time can fail. Would everybody agree with that? I think everybody would be in full agreement. The execution of a high probability historical trade can fail at that moment. So does that mean you don't take that play? Not in the least. You do take that play because the statistics, historical, are on your side. But because each play, whether it's in football, basketball, soccer, whatever it is statistically insignificant, and it is basically, it's like a coin flip. It's a 50-50, but you do have the averages of that particular play, or in our case, a play as a trade, on your side. Okay. Yeah, even LeBron James can miss a layup shot. Sure. You know. So that's the core thought process when we're trading, right? If you have plays or trades that have structural integrity over time, over a large sample of trades, you take that trade. That's it. There's nothing more to think about. Manage it, and if the trade works, great. Now you look back and again, I'm satisfied that I read it, took the trade, managed it as best I saw given the activity at the time. Now you look back and say, wow, that was a fantastic trade. Managed it well. Okay, it's passed. Feel good about it, record it, log it in, move on to the next one. All right, John's Barber Lopez reversal short is playing out dramatically. John, in our community here, the BLT stands for Barber Lopez trade, and by the way, Barber is with us today. So what that basically is it's a reversal trade from a key level. So we took the long on this pullback, and then John here took the short, okay, on this move here. So we actually have two potential trades here, one long up into that level as we took, and then John, having seen the market stall here, right, once price broke below the 89 EMA, that opens up the short play. You guys want to learn anything kind of a core play for what we look at is the 89 EMA. All right, I'm going to give you a little 89 EMA. Master the 89 EMA, and you're going to thank me. Ram, do you have a copy of that image, by the way? Handy on the 89? Thank you. I have it somewhere. It's just like it's buried. I thought I had it in my playbook section, but I don't. If you have a quick reference to it, that would be great. I just want to post that up for everybody. I have to dig it out, and it's buried deep somewhere. Yeah. Well, I'll hold on a second. Ram, I did find it. If you haven't yet, I did find it. Okay, good. Thanks for trying. I had to dig deep. I found it though. So here, guys. All right. The 89 EMA. I got kind of a little image meme about that. Hold on a second. Let me post it up here. Copy, paste. All right, and then I'll talk about it. All right. So let me post it. Let me basically post it up here for everybody, so it's on the recording. So for us, this is something that I've used for many years. Is trading rules. All right. Again, these are core trading rules. Right. There's obviously modifications to everything, but basically the core trading rules is I'm only looking for longs. All right. When there's a rising 89 EMA, and short only with a downward EMA. And again, using a candlestick chart, okay, because but it doesn't have to be a candlestick chart. So basically, longs above a rising 89 EMA, and a short on a break of the 89 EMA or a downsloping 89 EMA. All right. So those are core rules. So if you take a look, all right. So again, you can certainly save those rules if you want to. If you want to hold on to them. So our 89 EMA here is our thickest line. How come this is not working? 1 second. Let me get my pen. My pen does not seem to want to work today. All right. Let's see if this version works. Okay, yeah. So this, the 89 is the thickest line here. Okay, everybody see that on my charts? So essentially, we got a shift in the 89 right in here. So downwards here, right, to upwards here. So based upon that, right, prices moved up, it's come down, it's reclaimed it, and now it's holding above that 89 EMA. For me, this is long only based upon that rule. Now, Delphine asks, is it only for all time frames? So currently, it can be used for all time frames, but the larger the time frame, it won't be as sensitive. Okay, so we're using it on a 750 tick chart, ES. So currently it's specific to that. Let's just say you're going to say a 3-minute chart or a 5-minute chart. Does that 89 EMA still work the same? And the answer is yes. The only issue that's going to present is that it's not going to be as sensitive. So then you may need to modify an 89 EMA on, say, a 5-minute chart to a smaller size, maybe a 34 EMA, maybe even down to a 21 or a 13. Okay. But effectively, it works the same way. For us on an 89 EMA, on a 750 tick chart, that is our proxy for direction. So as you can see here, once the market shifted above a rising, and again, it has to be an upward slope. So a rising EMA. So the formula that I use is this, and I like to use shorthand for formula. So if price is greater than an 89, we'll put EMA so we can, right? And I'm going to put an up arrow. So what does this mean? If price is greater than an 89 EMA and the 89 EMA is rising, so that up arrow means a slope. Okay, this equals longs. And conversely, okay, so that's our core definition as I've used it for forever regarding the 89 EMA. So over here, we're up and we're only looking for longs. And that worked out well. Now over here, what happened? Right? Price broke down below. So if we focus on this now, up here, what's happened here? Price is less than the 89 EMA. And what's happening to the 89 EMA? It's now sloping downwards. What is that condition? It's a sell. So what John did here on our community on the PTG side, he shorted the break of the 89 EMA, or don't have to short the exact moment of the break. You can short it, within the context of price less than an 89 EMA, and the 89 EMA is sloping downwards. So that becomes a short, sell short. So if you want to use that, folks, as a guide, by all means. right? This is not rocket science, right? I don't mind offering some of the tools and ideas that we use. If it helps you stay on the correct side of the market activity and action, then use it. Sometimes simple the core premise of what we do here since the very beginning has always been to stay in alignment with the dominant force. That's easy as said, but you have to define, well, what does it mean by staying in alignment on the dominant force? So for our purposes here, using a 750 tick chart, that's what that means. And Delphine asked, based upon a 750 tick chart, right? Yes, in this case, yes. Like I said, Delphine, if you are um, using a different size, whether it's a tick chart or a time-based chart, you may need to adjust for sensitivity. Okay, so you can convert an 89 into, say, a 34 if the 34 kind of matches the pattern of an 89, but on a different time period. It just so happens that the 89 on a 750 tick chart, which is we use as an execution chart, we still use the time charts. Okay, so I got a 5-minute chart over here. So if you take a look, on a 5-minute chart, you put an 89 EMA on that 5-minute chart, it's not going to look the same, is it? All right, you may not even get a trade based upon that. So it has to be adjusted to whatever the time chart that you're, you know, working with. If you put it on maybe you change this to a 1-minute chart, okay? Say 1-minute ES. I don't know if an 89 EMA is going to capture that as effectively. Maybe you need a 34 or even a 55 or maybe something lower, maybe a 21 EMA. I think this is I think this is a 21 EMA. Hold on a second. Uh, yeah. So let me just adjust this for a second. Uh, make this. So on a 1 minute, all right. So on a 1-minute ES, that's a 21. All right, 21 EMA. See what I'm saying? Right. So for this move up, that captured pretty close to the 89 EMA that we were using on an ES 750 tick. And then when it broke below that, okay, there would be your short area. So depending upon the size chart, if you like using a 1 minute, right? So what you want to do again, just to kind of match it up as closely, you could do something like that. The core of it, regardless of whichever the size EMA that you're using, what it's designed to do is to define what side of the trade you're leaning on. That's all it's doing. Because it's an 89, it's not necessarily, oh, the 89 is magic because it's a Fibonacci number. I tend to use Fibonacci numbers in that regard, yes. But regardless of the EMA, it's not the value per se, it's how you're using it, what it's being used for, what's the definition. Is it helping me stay on the correct side of the market? Yes or no? Now, what I've done on this particular chart to this 21 EMA is I've created a high-low zone. So this is the high of the EMA, and this is the low line. And I've just simply created as, a shadow zone. So a high-low envelope of a 21 EMA. That's all that is, right? So that's the high-low. So the actual EMA, right, is in the middle of that zone. So kind of the idea is if price, right? So like here, one of the rules may be, price would need to close above a full candle close above the high of a 21 EMA, not the EMA itself, but the high value, high bar value. So that could be a rule that you could create for yourself as an example, right? A short would be a wait for a close above or below, or a long rather, would be a close, a full bar close above the high EMA. In other words, you got to create some sort of, rules for yourself using the various tools. So things like that help guide you instead of just being, oh, I think the market's going to go higher or lower. EMAs have been around since the beginning. They're such an easy, sometimes people look at EMAs like, yeah, they're so easy. They're, it's, oh, those are for beginners. No, they're not. It's in how you utilize them. And I can assure you, in how you utilize just a basic EMA is not a beginner because the beginners don't know how to utilize them. It's when you start really understanding price action and saying, okay, the fact that it smooths out price, there's the advantage. People think that many times that is, such a beginner thing. Well, they would be foolish to think that. Once you design it, whereas, hey, it's helping me stay on the correct side, right, of the market activity, that's where the power comes in. So think about that and how you're utilizing the various tools that you're using. Complex ideas are not necessarily the best. Everybody's heard of the acronym KISS. Well, you know what that stands for, but I actually refer to the KISS as keep it simple, smart, not keep it simple, stupid. Keep it simple, smart. Freddie, that is just the 21 EMA high low. All right. So moving average exponential. Okay. One's the high value. Okay. And the other one, duplicate it, and one's the low value. That's all that is. I don't have the EMA itself, right? All right. So let's just put the EMA there for hoots and hollers, right? So let's see. Let's duplicate that. Okay. And we're going to make it the close. Where is it? High, low, last. Okay. All right. So I just created the actual EMA. So it just is your EMA. All right. I'm not using last. I'm just using the high-low. All right. So that's the last. So I'll get rid of that. And I'm just using the high-low. I prefer to use the high-low. To me, that's more significant. Just for my own purposes, I think it's more significant. It's more meaningful, a high-low of an EMA. And then you just, when you do it, you create that and it creates just a band, an envelope. It's not magic. I mean, nothing that we do is magical. It's just, how you want to, utilize the tools. No, these are not Bollinger Bands. They're not Bollinger Band. I mean, you could use, see, okay, so let's put a Bollinger Band on here. Right? What is it? 21 is the Bollinger Bands. Bollinger Bands. Here we go. Bollinger Bands. And what is that? A 21? That's a 10, right? So let's put 21 on here. Okay, Bollinger Bands, 10, simple move. We'll make it exponential because I do everything with exponential. All right, so here's your exponential Bollinger Band. Okay. So the only match is the actual EMA. So it's 21. So that's the only thing I'm matching. So there's your Bollinger Band, high-low edges, and all what the 21 is a high-low of the EMA itself, forming that band. So if you like using Bollinger Bands for that matter, okay, you could use a high-low 21 EMA like we're doing here. Use your 21 Bollinger Band, and now you have a band within a band. All right, so you can see that the volatility is compressing here. That's a 2 standard deviation Bollinger Band. So if you like that, that could be a way to go for you. There's just an unlimited, really, amount of things that you can do. The key to all of this, when you're putting something on a chart, no matter what it is it something that is going to help you make a decision? How are you going to use that particular tool that you've just created? Bollinger Band. I don't use Bollinger Bands. Doesn't mean they're not effective. I don't use them. I know what they are. I know how to read them. I just don't use them. If that is information that you find important, then use them. But just to have it as a nice thing to have on your chart, okay, you decide. You make the call, as they say. But when you do, you have to then look and back test it. What patterns does a particular Bollinger Band offer in terms of helping you make a decision? Do you know? Have you done that research? So I can never say that something is better than the other. I say do the research on it. If you find that there's efficacy in a particular indicator that's really helping you make a decision, and not just one or two instances. Oh, I saw this. I'm cherry picking, this. Oh, see, what I do is when it comes down to the lower band here, I take a long, and then I'm up at the low higher. I'm going to take a short. Okay. I mean, you can go back and do that. All right. So you have to just do that research. When we are outside of them, we have to be cautious. Why? What's the definition of cautiousness when you're outside them? I'm just asking a rhetorical question. You don't have to answer me. But this is how I was taught. This is how I was taught, right? If somebody makes a statement, all right, about whatever it is, okay, I'm not going to just conclude that your statement is true or false. I'm not going to make it, I'm going to say, okay, you made a statement. Show me what you mean by that. And then what's the kind of the back is particularly in trading, what's kind of the historical back test of something like that? Or is it just, oh, I read it in a book somewhere to, I'm not questioning you, Delphine, by the way. I'm just, it's more rhetorical, right? So it's the idea as well. Also, when it's pushing outside the band, right, like this, or riding up the band, well, volatility is expanding. No, volatility had contracted down here. Yes. Okay, so volatility is expanding. Well, that volatility could simply mean that it wants to go higher. And yes, it could push outside that band quickly. Now, I would not necessarily want to short that, but there may be an opportunity to short it if it comes back inside the band. Again, you have to kind of create rules to that, right? And back test it. But certainly, when prices push outside the band, right, there's opportunity for the price to come back inside the band. Well, how deep inside the band? Well, whether it's a daily time frame or a 1-minute chart, it doesn't matter. It's going to be read the same way because a chart's a chart's a chart. All right. So my point to all this, everybody, is not to have an argument of whether or not Bollinger Bands works or anything like that. It's just simply whatever the tools that you decide to use, understand them, the construction of them, and identify repeatable patterns. Repeatable patterns, not just a pattern. If you identify a single pattern, well, how repeatable is that pattern? That's where most people, and I would say most, will not go deeper. They won't do the deeper dive. They won't do the research. For whatever the reason, I can offer reasons, but I won't. And it's perhaps easier for most people to hear something or read something or watch a video that isolates and a specific example and then conclude heuristically that that's it, that's the magic wand, that's the one I've been looking for my entire trading life. Sorry to disappoint you, but that's not the case. Yeah, David Copperfield, right, made the Statue of Liberty disappear. Did the Statue of Liberty actually disappear? No, it's all an illusion. Barbara, what you want to do here is go to the chart settings. Go to bar period. So let me write it out. Chart settings, bar period, select tick charts, or let's see, what is it? What is it called? Number of trades per bar. It's all an illusion. Okay. All right, we're back to opening range high. As you can see here on our 1 minute, 5 minute opening range high, high low. So push out outside of that up to, interestingly enough, look where prices stalled, right? The prior opening range high. That's why having, identification of prior ranges from this previous session can be extremely helpful. So all the price did was, open, move higher, and then stall out at yesterday's opening range high. We don't know that's going to happen, but certainly, being long into that area is certainly going to be, reason to, as I did, move my stop tighter on a trail. If it wanted to break out further, terrific. If not, the potential was for a rotation back down into the range. So I want to protect myself on that scenario. So also, even though we look at tick charts for our execution, I am always referencing the larger periods, seeing where price is currently versus where it was, or what references that we can use in the prior sessions. All right. Let me know if you have any further questions, comments. I'm going to take a short refreshment break, and I'll be back in a few minutes. All right. Back with you for a short break. All right, let me know if you have any questions, comments. We're still in a cycle day 2, balancing phase. Looks as though the profile here is pretty much that pattern. All right, it's kind of formed a delta shaped pattern here, which is a balancing pattern. Came back down, held value low, all right, nibbling its way above currently value high. All right, we'll see if there's any sustainability now above that value high or retest of the high. That could be a play. Other than that, maybe it's a false move. All right, we come back down into deeper into the current value. All right. Stick around today. Danny with an eye is on deck at noontime, I believe. Now, again, I asked this question last week. How many of you have jumped on board and taken advantage of the Pitbull Traders evaluations promo? Big deep 40% discount. Okay. Oris jumped on a few. Okay, great, super. How about anybody from the pit room? Delphine, you have been considering it. I don't want to point fingers at you. I'm sorry if I am, but I know you had mentioned you were interested in doing so. Anybody else from the pit room? Again, remember the idea here is, if you do like what we do and everything else, again, we're giving quite a bit of insights into how the various contributors trade ideas, etc. We don't call out trades naturally, but you'll see what we do live on screen. Again, if you do like what we do and how we do things, the best way to show us, so show the guys over at the pit room, or Pitbull Traders, all right, is to purchase an evaluation, or maybe two. All right. Well, again, the current promo that's being run ends August 31st, Monday. Probably going to be their best promo that they have. So take advantage of it. John, you're going to have to check out as to why. All right. I don't know about that particular aspect of it. You may have to generate a support ticket on that. Yeah, so large voids. What I would say to you on that again, if there's any questions into how to do specific things like configurations, like you're asking, all right, the response would be, or at least is to just ask that question. Send it to support@pitbulltraders.com. You should get an answer back from them. So support, you just write that in. Support@traders.com. Ask that question. Yeah, send an email. You'll get a response. I think their policy, the support policies, you should be hearing within 24 hours. They don't have live chat. that's going to answer you immediately, but that is, you should get a response from them. So please send it there. Oh, not bully traders. I'm sorry. Don't. I wrote support at pit bully traders. No, it's not pit bully. Let me change that. It's pit bull traders. That's funny. Pit bully traders. You're a pit bully trader. You're a pit bully. Okay. So pitbulltraders.com. Yeah. It's a Freudian slip. You're a pit bully. Well, well, well. Oh boy. All right. Don't have much left to look at the moment. Just kind of stalling out here. Anybody have any thoughts, questions, considerations? Got NVIDIA after the close here today. So, as somewhat anticipated, and I wrote in my missive this morning, not really anticipating a lot of, um, you know, big rotational action or breakout action, that is. And so we're kind of getting what, you know, somewhat is expected. When you get these rotational moves like this, or this kind of choppiness, whatever you want to call it, kind of these balancing stuff. Um, PTG auto strategies. Let me just make a note of those for everybody's edification. Is the strategies that I've developed on in terms of our auto execution work best when there is expansion ranges or higher levels of volatility than we currently have. Okay. And so, you'll see quite often, these things kind of get stopped out. All right. Now, keep in mind, these are all in simulation mode for purposes of demonstration. But in reality, okay, you want to be, implementing various strategies um, in a more judicious manner, not just turn the auto X on and let it do its thing. Because if it's not the proper environment, it will still do its thing, but you're not going to get the results that you would be anticipating. So a lot of this has to do with anytime you're using any automation, by the way, or even when you're trading on your own, discretionary, you have certain rhythms that your strategies or your trades work out best in, don't you? Or if you don't, you should. But let's assume we all do. You know what those rhythms are. So you want to play to those rhythms. That should make a lot of sense to everybody, right? You want to play to the rhythms that best suit your strategies. And so that also requires that you need to define what those strategies and those rhythms are. So again, that's a large part of, a lot of what we do as traders is, again, you're the manager, you're the portfolio manager, you're the risk manager, you're chief cook and bottle washer. Know what rhythms and what conditions are best for your particular strategies. So when we show and demonstrating the AutoX algorithms that we have, they're not all going to be producing, like an ATM machine, because they do work best in certain rhythms. And if the rhythms aren't there that support that particular strategy, that strategy is not going to perform well. So don't extrapolate that, oh, 1 or 2 days of not so good trades, that the algorithm or the strategy is not successful. It all depends what type of rhythms, right? So when you're using any of our algorithms, our auto trade assistance, you need to be able to enable it and disable it, which you have full control over, under what conditions you're going to use it. Just as no different as if you were to, with your own, personal trading, when you're doing something manually in discretion. Know what the conditions are. Have those conditions defined. If this particular rhythm today is not conducive to what I do in terms of the strategy and your plan, then you're sitting and watching. Maybe you're in simulation mode and you're trying to, you're in testing mode. Maybe you have an idea on a particular other strategy that, hey, you know what? I'm not so good in range. Well, my strategies don't work so good in range. So I'm going to, on these rangy type days, I'm not going to run my live strategy, but I'm going to be testing out something else in this type of environment. That's how you make good use of each day. You're here, you're spending the time, you're spending the effort, but the market's going to dictate whether or not, the time spent, is profitable in terms of your strategy. Regardless, though, you use the time to say, I'm experimenting with something. I'm going to test that out. And I'm in simulation mode. So that way you use every single day as an opportunity to learn, to gather information, right? And, master your craft. Maybe there's something in particular you want to focus on. So focus on it. Set up the if the conditions there are warrant, then that's the time to be able to jump on that opportunity. Let me give you a quick another example while we're here, right, before we go. So take a look. Let me just get rid of this for a second. And another thing, you want to reduce the amount of, if you're focusing on something particular. So let's just focus on here. This will be our final kind of educational idea here. So as we were speaking of a bit earlier, we were talking about the 89 EMA, right? So let's kind of configure this where we're really just focusing on the 89 EMAs. So let's just use this for the time being. So this will be good. So, but what I've done here is I've taken off the ATRs. So really all we have here is our, what we call our fair value zone. All right. And so that's the 89 EMA. So let me go here and I'm gonna make it a little bit larger than life. Here we go. All right. So I've just really thickened up that line, the 89 EMA. Okay. So if you note here, how you want to kind of do this is, let's just say you want to focus on the 89 EMA idea. And what was the formula that we laid out before? Price greater than the 89, and we'll put an up arrow, right? Equals what? Right, a long play. Capiche? Everybody's following along? So what do we have here? So we have the 89 that's has dipped down, right? This is where it's beginning to shift right here when it changes colors, right? So now what's happening to the 89? We get a positive slope, right? Okay. So we get a positive slope. So what is that? And where is price currently? So price is greater than the 89, and the 89 has a positive slope, angling up. So what is that condition? I'm looking for a long. So in that case, we get a little bit of a pullback near to the 89. Is that a buying opportunity? Yes. All right. So this is a buying opportunity in here. So that's all what we're doing is just isolating on a condition. That's it. I call this actually the isolation approach, right? In my head, I don't have it documented, but it's basically the isolation approach. So we're basically isolating on an idea or a structure. And when it comes to tick charts, by the way, I'm not, looking at a particular candle formation. Has to be a long tail, shooting star, whatever, bullish engulfing, bearish engulfing. I'm not looking at any of that. That's too much more to consider. Another variable to be thinking about. What's the average price doing based upon 89? It's green, and that's, bullish, and it's sloping up. That's the average price based upon 89 bars. Price is above a rising 89. What's that condition? Is it a buy condition or is it a sell condition? Based upon my rules and my guide, it's a buy condition. You may have a different one, but if you're following this as a guide, then that is a buy condition. So when you're seeing that, I'm not seeing anything else. I took away the ATRs, I took away all the other information that may conflict with the decision of whether or not you should be considering a long trade or not. So use what's effective for you to make a decision. All right. So John says, yes, but it was also a short at A7. All right. So at the 89, okay, that's a good point. So this is where what happens here is when you have other tools, there are always going to be conflicts. One's going to suggest a sell, one's going to suggest a buy, and you're going to be left with what the hell do I do? So let me make a statement here. ATRs are static. Okay. EMAs, you know what I'm going to say, right? Are dynamic. That's the core difference. Because an ATR is static, it's just the reference level. It can easily get blown through, traded right through. It's not going to necessarily going to stop it. If the dynamic momentum in price, so question then, which takes precedence? A static line or a static area, or a dynamic activity, a structure? I'm gonna opt for the dynamic in most cases, probably 99% of the cases. Doesn't mean the ATRs won't stop the price action. Of course, that many times they will. But if you have an ATR that's very, very close to where price is shifting, I'm going to opt for that dynamic move. Like that ATR was never there. So this is what I'm talking about in terms of like, there are going to be conflicts all the time. It's what you decide to focus on. So the reason why I disabled and I removed the ATRs here is not to have that as part of the decision process here when we're focusing on, say, the 89. All right. So this is the idea. So if price is above an 89 and it's rising, that is a condition for a long condition. Okay. Now we can add other things in there. Well, what's the slope of the 34? Well, we have that's the thinner line here, right? So that is also angling up pretty well, even more so naturally above the 89 because it's a shorter EMA. So the 34 is a positive slope as well. So price pulls back to rising. 34 is rising, right? Faster actually though, but 34 is rising. 89 is also rising. Price pulls back to those rising EMAs. What could be a decision? I want to buy a pullback into rising EMAs. The average prices are rising. The current price is the immediate price. But the average of prices over a period are rising. I'm going to opt to take a long because the rising prices, the average of the prices are rising. And now prices pull back into the averages of those prices. Like I said, it's not rocket science. And this is the way to use moving averages. I'm just identifying what side of the moving averages is price on. What are the moving averages doing? What's the average price? Okay. So this would be the buy area here. All right, let's erase that. So now look at the EMA here. Right? They're compressing. Is that a buy anymore? Price is now, right? Price is less than 89, right? And 89 is essentially kind of neutral to down. I use that little squiggly line as neutral, right? Neutral to down. Neutral to down. So is that a long or a short? Well, it could be null, right, to short. And I say null because if it's flat, I may not have an immediate answer as to the direction. But so in that case, I refer to that as null, N-U-L-L, right? It's null, but I'm considering more a short. Certainly not a long, right? So in this area right here, this could be what you could be identifying as the potential for a new trade would be potentially to the short side, but it certainly is not on the long side. So you have two decisions here. You had this one where this one was a long, and this one was, again, lean to the short side. As it's developing, yeah, you see it down now. You say, okay, now I want to short. Well, yeah, at this point, you'd have to wait for some sort of a bounce back. But if you're saying, I just want to stay on the correct side, what is the current lean? Always ask yourself, what is the immediate lean? What are the EMAs presenting for an opportunity? What are they looking at? Long, short? What are they looking at? Keep asking yourself those type of questions as prices are unfolding. It will help keep you on the correct side. It will help keep you away from the wrong side. And it's not rocket science. I'm sorry to say. I'd love to have the most complex, algorithm that, it's the best of everything. But frankly, some of the simplest tools still remain the most powerful, but it's how you use them. A powerful tool, an actual tool, like a reciprocating saw. Anybody use a reciprocating saw? I love those. My favorite tool is a reciprocating saw, right? But if you know how to use it, it's one of the best tools ever. If you don't know how to use it, you're going to hurt yourself. Seriously hurt yourself. But it's not, it's a simple tool, but used correctly, it's going to be, your best friend in terms of construction and stuff, or taking things down, cutting through things. So it's no different with trading. Know how to use the tools. It's not an EMA is an EMA. Okay, great. Everybody knows what an EMA is. How do you use it? What's your plan to use it? How do you identify it? That's the skill. That's the competency. I know it sounds, too easy, right? But why complicate things? If for nothing more, if it helps keep you off the wrong side, then it's done its job. Yeah, the Sawzall. Yeah, reciprocating saw, Sawzall. I think Sawzall is the brand name, right? But it's more than there's more than just the Sawzall as the brand name. I think that was one of the original is the brand, right? Was Sawzall. I think there were other brands of reciprocating saw, but I think everybody just refers to it as a Sawzall. Oh, it's not a brand. It's a brand, not an idea. Is that what you're saying? Well, anyways, I always refer to it as a Sawzall. Oh, you have no idea. Okay. Yeah. I think I've seen a reciprocating saw in a Makita. So yeah, I think yeah, the reciprocating saw term is generic. It's just a brand. So, but I always refer to it as a Sawzall. Yeah, Sawzall is a brand. But like if I bought a Makita reciprocating saw, I'm gonna call it a Sawzall. That's what I mean. I love them. It's a great tool. Every guy has to have a Sawzall. Even if you don't do anything, just say, "Hey, I got a Sawzall." And then you're in the club. Right. You got a Milwaukee? Okay, Milwaukee. Yeah, but even if it was a Milwaukee, JB, I would call it a Sawzall. All right. That's what I mean. It's, when something sticks in your head, you just say, yeah, it's a Sawzall, but it's a Milwaukee Sawzall. Anyways. All right, you guys get the idea. Hopefully, some of this conversation and examples. Again, we had a nice trade to start off the day, which worked out beautifully. I hope these little terms and ideas kind of help you go forward. Like I said, none of this stuff has to be super difficult, and try not to complicate it. You know, some of, like I said, the simplest concepts sometimes are the are the uh, they're the most powerful. Just stay on the correct side. And again, the final the decision comes in is how aggressive do you want to be in terms of your trading? Do you want to be taking every shift of the 89 or 34.89? That's up to you. JB is so bored with talking power tools. All right, everybody. I am going to conclude our session here today. It's about 11:40. Going to give you guys a break. Danny with an I is coming on at noontime for the trading mindset section of the program. So stick around, relax. This is a good day to just chill out. And again, do consider, obviously, again, we don't like to push, we're not big, hard salespeople here. I never have been. But again, like I said, if you do like what we do, give these guys over at the Pitbull Traders a shot. That promo ends Monday, the 31st. And if you do have any questions about any of that stuff or any issues, if you're encountering any issues, you got to reach out to them. The more feedback, let me just mention the one final thing. The more feedback we can get from everyone, all right, and it's terrific feedback because I received some feedback last week, and we have weekly meetings about all of this stuff. So your feedback is important to us to change things, to make things even better than what they may currently be. But without your feedback, if there's a change that needs to be made, we don't know if it's going to be made, right? So give us some feedback. Everything that you offer us is definitely constructive feedback, and we work to make everything even better and better. All right. So give these guys a shot. All right. Do static drawdowns. Right now they're end of day. Um, Static drawdowns. Yeah. Perhaps that can be offered at some point, JB. I understand about static drawdowns.